welcome to the Trading Bell. I'm Muathi Kilonzo, and today we are talking matters liberalization of our market. In the country, we understand technology is a critical ingredient when it comes to divulging the power to get involved in our markets. And this is through your phone. You can trade on applications. And a month ago, EFG released an application known as EFG Hermes 1. What are the dynamics of this new product, the role of technology in making sure that more retail investors are coming on board? We shall be having a conversation with Muathi Kilonzo, who is the head of Equities EFG Hermes Kenya. And before we do that, let's take a look at his profile, shall we?
Muathi Kilonzo is the director and head of Equities at EFG Hermes Kenya since EFG Hermes opened an office in Kenya in 2017. He is also part of the EFG Hermes Frontier Equities sales team. Before EFG Hermes, Muathi held positions at Exotics, Renaissance Capital in London and Nairobi, and Morgan Stanley in London. Muathi has a Master of Science in Management from Imperial College London. He read Economics and Philosophy at the London School of Economics and Political Science, LSE.
Thank you very much.
Thank you,
for making time to speak to us. So 4 weeks. EFG Hermes 1. Maybe for starters, just explain to us the nitty-gritties. Why this product? What is this product, first of all?
So, we have to go back 4 years. So 4 years ago, EFG Hermes, which was an established broker in the Middle East, decided to open an office in Kenya as part of their frontier market strategy. So frontier markets are those markets who are slightly less liquid than the emerging markets. So if you think emerging markets are China, Taiwan, etc. Frontier markets are places like Kenya, Nigeria, Vietnam, etc. So we opened a greenfield office here, and we quickly ramped up with our institutional clients. So over the last 4 years, we've become the largest broker in the market, driven by institutional local clients, so asset managers who trade with us, both locally and internationally. Now, EFG in its other jurisdictions has a large retail presence, so whether it's in Egypt or in the UAE, etc. Also, in other markets where we're active, we can see that retail is a very large part of the market. So if you look at places like Bangladesh, Pakistan, Vietnam, the pace and the activity in the market is really driven by retail investors. And we felt in Kenya that there had been a time when retail was active and retail was very, excited and participating in the market. So we know that that market is there. We know that there is that opportunity. Unfortunately, as the years have passed, the idea of retail became a high net worth. So it's someone who's trading in the millions of shillings.
Yes.
And we forgot about the person who maybe has 1,000 shillings or 500 shillings or 10,000 shillings, someone or a kid who wants to start building their portfolio from a young age. So this is basically what has driven our investment in this product. So the IT infrastructure we already had in place, but the EFG one that we've launched in Kenya is actually the first of a new platform, and we'll slowly launch that in different markets.
Okay.
And so the idea is basically to excite that base and to get that client who wants to trade the markets off their phone or on their desktop, and doing so, participate in the market. And I think for a healthy market to exist, you need retail.
Yeah.
Retail also spur interest in far-flung corners of the exchange. The institutional investor is hamstrung by liquidity constraints. So what you've found is that they've gravitated towards the large cap stocks, leaving the smaller caps, who have a very interesting story, virtually untouched. At the same time, as the capital markets grow and actually as you get out of this pandemic mode, you'll find that companies will need to raise capital. Some may be small, some may be small capital raisings, and you need retail really involved in that. And we can also see that the regulators are focused on it. So the NSE is in the process of upgrading its trading module so that you can have day trading. So you basically can buy and sell shares during the course of the day instead of waiting for 3 days for the shares to settle and then, trade again. So
definitely,
if in the morning at 9 o'clock in the morning you think Safaricom has dipped, let's say, and you think there's an opportunity, and later in the early sort of afternoon at 1 p.m., you see that the stocks gain 2 shillings, then you can lock in those gains and trade. You can do the same thing with all sorts of other counters.
That's quite interesting because you've mentioned you have a stronger retail presence in other jurisdictions. What is causing that difference? You've mentioned Kenya,
Yes.
Retail went to high net worth. So me with my 5,000 shillings, it's not a thought that I can put into the stocks.
Yes.
Is it an informational issue? What really happened? What's the differing aspects?
Look, I think there was, so in the heydays of retail, so let's go back to around between 2002 and maybe 2007. You had a lot of companies come to the market, and that culminated in the Safaricom eventually coming to the market. But you had Equity Bank, you had WPP Scan Group, you had a lot of activity, capital markets, you had KenGen, you had other sort of follow-on capital raising. So there was a lot of activity and there was a lot of excitement in the market. Since then, we haven't seen that. So we don't have the excitement issue at the moment. But that can come. I think that the regulators are working hard on getting more listings. Now, the other issue is, technology. And I think we've started to recognize that. In other markets, they had developed the ability for investors to trade on their apps and make it easier, faster. Thirdly, also democratize margin. So in the sense that, sometimes here again, banks do give margin against shares, but that tends to be high net worth individuals with large amounts of shares in a company. But we're talking about someone who wants to maybe, invest 5,000 shillings or 10,000 shillings or 500 shillings. So, I think as that module comes in and you can take margin, and also you can trade opportunistically during the course of the day across different counters as the stocks move up and down. I think is also an important way of people thinking that, because then you start to get that sort of professional day trader, if you want to call it, so someone who sits there and trades.
Definitely.
Yeah.
So it's been out for 4 weeks now, a month. How's been the reception? What trends are you seeing?
Yeah. Look, I think great. Yesterday I was talking to someone who had signed up and they were telling me that it's a really great app, So feedback that we're getting is really good. We are marketing it, we're building the profile, we're building the name, and also we're building the functionality of that app as well.
Okay.
And eventually, we should have something similar to what we have in other markets where, for example, there's a research product for retail, there's information, there's summaries, etc. So we're building out the product and bulking it up. But the reception's been good, and I think we're a very clean, easy-looking app. It's simple to use and very intuitive.
Yeah, definitely. Actually, looking at the numbers of the market performance for Q2, of which we are in Q3.
Yeah.
So looking at the trend from Q1 to Q2, there's been quite an improvement. Knowing that the effects of COVID-19 to the market, we saw equity turnover going up 19%. Yeah. We saw market cap also growing by 10%. And also numbers of shares traded also going up, and by quite a significant number, from 990 millions to crossing to the billion mark, which is quite interesting. Yeah. I mean, the role of technology in enabling participation in the market, how critical is that, and where are we as a market as we speak?
Look, I think technology is the game in town, because ultimately you need to make it as frictionless as possible for people to make their investments. And ultimately that makes it cheaper because it's faster and simpler and easier. We've seen activity pick up in the market. You can see that local investors have been a lot more active. International investors have also been a lot more active. And I think there are a few catalysts around that. I mean, one is obviously Safaricom and Ethiopia entry, eventually getting the license. So, that was something where the market wasn't entirely sure, A, how the consortium would look like, B, how much money that Safaricom would have to raise to put towards this investment, and C, also, I think the ceasefire and Tigray presumably has also helped as well. So Safaricom has been a big driver of that. At the same time, the banks were very cheap. Equity Bank and KCB have had a strong rally over the last few weeks. And that's driven by investors seeing value. Now, the banking sector as a whole, we still think offers some value. There are some few things that we need to look forward to. So I think once the central bank approves the risk-based pricing models for the banks so they can actually start to lend, and you see private sector credit grow, I think that's going to be a big catalyst for the banks and indeed for the economy. So I think that's something that we think is imminent. We don't know the timing, but it should happen at some point. So I think that's something that will be interesting.
Yeah, and you mentioned, the excitement of 2007. We haven't had that in a long time. And earlier on, we were chatting, about Nigeria and the disruption that is happening, even in their banking sector.
Yes.
I mean, looking at such potential disruption, can we have an element of also it sort of impacting the market and seeing maybe more listings from digital backed companies?
Yeah, I mean, certainly. I mean, you can see that whenever surveys are released on the fintech sector in Africa, Kenya is somewhere in the top 3. Kenya, has Kenyan built tech businesses have been attracting a lot of investors. That comes hand in hand with an exit at some point for those investors. So I think certainly those disruptors will find themselves on the market. And what's interesting about the tech scene here is not just in, we were talking about financial services in Nigeria, but there's a lot of startups in agriculture, for example, which is a big part of this economy. You've got people in transport and logistics. You have people in insurance. You have people all across the different sectors looking at how they can leverage technology. Now, what I think will be exciting for the NSE is to create that environment where those investors can monetize their investment and then share the investment with retail. And I think that's why retail is very important, because in each of these markets, whether it's India or Nigeria, et cetera, where you see tech companies coming onto the market, retail is a very large part of that segment, and they create the volatility and the trading and the activity that also makes it attractive for those investors to exit their investments on the bourse. So I think certainly it'll be very interesting. And let's see what also happens regionally. We're not just thinking in a cocoon of Kenya only, you know. There's exciting things going on in Uganda, Tanzania, Rwanda, Burundi, etc., Ethiopia. So I think Nairobi clearly could be a very interesting avenue.